Swayam Prabha. Digital India. Educated India.
Yogah karmasu kaushalam.
Hello everyone, I am Dr. Chetna Marvadi, Associate Professor School of Commerce, Gujarat University. Today we will study part 2 of contract costing. In previous part 1 of contract costing, we have studied about number 1 meaning of contract, number 2 what is contract costing, number 3 parties of contract, that is contractee and contractor, number 4 meaning of contract account, number 5 expenses of contract and their accounting treatment. For completion of contract, several expenses are done by contractor. We had covered material expenses, labor expense and plant and machinery sent to the contract. All relevant transactions pertaining to these expenses are discussed there. In part 2 of contract costing, we will undertake discussion about different expenses. Let's understand learning objective of this part. Number 1, to understand about special plant sent on contract and its related accounting treatments. Number 2, to understand other direct expenses like architect fee, subcontract and their related accounting treatments. Number 3, to understand indirect expenses and its related accounting treatments. Number 4, to understand accounting treatment when contract is completed. Number 5, to understand accounting treatment at the end of the accounting year when contract is uncompleted. Number 6, to understand terminologies used in contract account. Number 7, to understand format of contract account in case when contract is completed and in case when contract is incomplete, that is work in progress. Number 8, to understand computation of profit or loss on contract. Number 9, to understand disclosure of work in progress account and profit or loss in final accounts. We will continue with plant and machinery. Now, we will see accounting treatment of special plant and machinery. First case, when special plant and machinery is purchased for contract, entry is contract account debit with purchase price of special plant to bank or suppliers account. The plant or machine bought for a contract which would be either completely worn out before the contract is completed or generally not useful for any other contract and is to be sold out is known as special plant. The capital cost of such plant and machinery is regarded as expense exclusively incurred for the contract and the contract account would be debited with the value of such plant when the contract is completed. The contract account will be credited with any value realized or scrap value of the plant. When such plant is destroyed or stolen, no entry for profit or loss is made either in contract or profit and loss account. Let's understand other expenses, other direct expenses. In addition to expenses on material, labor and charge for the use of plant and machinery, there are certain other expenses which are charged directly to contract concerned. As these expenses are specifically incurred for particular contract, they are debited to that contract account. These expenses include architect's fee, subcontract costs, etc. Entry is contract account debit to bank account. Let's understand for indirect expense. the majority of expenses incurred by a contractor are charged direct to contract concerned. However, there are certain expenses of management or general expenses which are incurred providing services to all contracts and which have to be apportioned on some equitable basis among contracts. Thus, each contract will have to be debited with its share of overhead expenses, and the entry is contract account debit to indirect expense account. Third, when the contract is completed, the entry is contractee account debit to contract account. Contract account will be recorded with full contract price. Let us understand accounting treatment at the end of accounting year when contract is incomplete. Entry is work in progress account debit to contract account. Since the work is not completed at the end of the respective accounting year, contract account will be credited with work in progress account and contract account will be closed for that respective year. Work in progress account consists of certified work, uncertified work, value of materials and plant and machinery, written down value of plant and machinery on site at the end of accounting year. In the beginning of the second year, reverse journal entry will be passed for contract account of second year. Entry is contract account debit to work in progress account. After having discussion for different elements of contract account, now we will have discussion for some important terminologies or components of contract account. These are number 1 certified work, number 2 uncertified work, that is work not certified, number 3 work in progress. In case of uncompleted work and to determine profit or loss of contract account at the end of accounting, the computation of work certified and work not certified is needed. Let us have discussion on them. First, we will understand certified work. In case of large contract, from the viewpoint of time and amount, it is usual for the contractee to pay a certain percentage, say 75%, 80%, 90% as per the agreement between the contractor and contractee of the value of work done by the contractor. The payment is made after the contractee satisfied that the value of work done is certified by the architecture or surveyor. The architecture or surveyor issues a certificate stating the value of work done and it is termed as work certified. For example, some part of contract is completed by the contractor of rupees 8 lakh, but architecture or surveyor has certified 80% work done. In this case, certified work will be rupees 6 lakh 40,000, that is 80% of rupees 8 lakh. On this certified work, contractee will make payment to the contractor. If agreement between contractor and contractee is 70% of work certified, here payment of rupees 4 lakh 48,000, that is 70% of rupees 6 lakh 40,000 will be made by contractee. It is a part of work in progress from the viewpoint of contractor. Let us understand the journal entries in the books of contractor. First, for work certified, work in progress account debit to contract account. Second, when payment is received by the contractor from contractee, the entry is bank account debit to contractee account. Let us understand second terminology, which is uncertified work. It is that work which is done by contractor but yet to be certified by the architecture or surveyor of the contractee. It is also part of work in progress from the viewpoint of contractor. Let's understand journal entries in the books of contractor. First, for uncertified work, the journal entry is work in progress account debit to contractee account. Now, let's understand valuation of uncertified work. Under different circumstances, the value of uncertified work is determined. These are: first, if the work done is valued at rupees 3,20,000 and the certificate is received for rupees 3 lakh, the difference rupees 20,000 is the value of uncertified work. Second, the amount of uncertified work is inclusive of profit, but generally uncertified work is calculated on cost. When information about cost is available, uncertified work should be calculated on cost price only. For example, the total work done is rupees 3,20,000 and its total cost is rupees 2,40,000. Out of work done, uncertified work is rupees 20,000. In this case, cost of uncertified work is 20,000 into 2,40,000 divided by 3,20,000, which is equal to rupees 15,000. It is the cost of work uncertified. Third, sometimes the certificate for work done is received few days prior to the close of the year. If expenses incurred after this date till the close of the year are given, then the value of uncertified work can be calculated by totaling the expenses incurred. For example, the work is certified on 1st March 2024 and its value is rupees 4,80,000. Further, assume that the total expenses incurred between 2nd March 2024 to 31st March 2024 are rupees 35,000. The value of uncertified work is rupees 35,000. Fourth, sometimes the details of expenses incurred after the date of architect's certificate till the last day of the year are not given, but the value of total work done for the year is given. In that case, the proportionate expense of the intervening period are taken to be the value of work done but not certified. For example, total value of work done for the year is rupees 6 lakh. A certificate is issued on 1st March 2024 and expenses incurred till 31st March 2024 are not given. So, uncertified work will be proportionate share from the total work done and it is rupees 6 lakh divided by 12 months, which is equal to rupees 60,000. It is divided by 12 because the value of 1 month is not given, that is month of March, with assumption that work is done evenly throughout the year. Let's understand third terminology, work in progress. Work in progress is prepared only when the contract is uncompleted at the end of accounting year. Work in progress consists of certified work, uncertified work, value of materials and plant and machinery on site at the end of accounting year. The value of plant and machinery will be after consideration of applicable depreciation, that is written down value. Accounting entry will be passed at the end of accounting year. Journal entry for work in progress at the end of accounting year is work in progress account debit to contract account. In the beginning of next year, reverse entry will be passed. In case of uncompleted contract, the total profit is not transferred to profit and loss account, but certain portion of such profit is reversed for contingencies. Let's understand journal entry of profit for contingencies at the end of accounting year. Contract account debit to work in progress account. Note that work in progress account would appear at credit side of contract account and in balance sheet at asset side. Let's understand format of contract account when contract is completed. Contract X account for the year ending 31st March 2024. First we will see the entry on debit side. So on debit side, first entry is to bank or suppliers account, it is with purchase of material. Second entry is for to stores control account, it is for stores supplied. Third entry is to bank account, it is for wages paid plus outstanding if any. Fourth is to plant and machinery account, it is for plant and machinery supplied from store for general plant. Next is to bank account for direct expenses and for purchase of special plant and machinery if any. Next is to bank account for payment of architect's fee, subcontract, etc. Next is for to indirect expenses account, any apportioned overhead, and last is balance if it is profit, then to costing profit and loss account in case of profit. Now let us have a look at on credit side. On credit side, first entry is by contract T account, it is by the full amount of contract price as contract is completed. Second is by stores control account, it is for unused stores returned back to stores if any given in example. Next one is by plant and machinery account, it is for remaining plant and machinery after calculating depreciation. Next is profit and loss account, this entry is for abnormal loss of materials, plant and machinery, destroyed, stolen, etc. if any given in the example. And last one is by costing profit and loss account if it is a case of loss. Note that profit or loss of contract account, as the case may be, will be transferred to costing profit and loss account. A contractor may have more than one contract and contract account is prepared to know the profit of each contract and profit or loss of those contracts are transferred to costing profit and loss account to know overall profit or loss of the business, that is contract business. Let us understand the format of contract account when contract is not completed. Contract X account for the year ending 31st March 2024. Let us understand first entries on debit side. On debit side, first entry is to bank or suppliers account, it is with purchase of materials amount. Second, to stores control account with the amount of stores supplied. Third, to bank account, it is for wages paid plus outstanding if any. Next entry is for to plant and machinery account, it is for plant and machinery supplied from store general plant. Next, to bank account, it is for purchase of special plant and machinery if any given in example. Next, for to bank account for payment of architect fee, subcontract, etc. Next is to indirect expense account for apportioned overhead. Next is to profit and loss account, to work in progress account for contingency purpose. It is explained in subsequent point and this entry is in case of profit. Now let us understand entries on credit side. On credit side, first entry is by stores control account, it is for unused stores returned back to store if any. Next is by plant and machinery account, it is for remaining plant and machinery after calculating depreciation. Next entry is by profit and loss account, it is for abnormal loss of materials, plant and machinery destroyed or stolen, etc. if given in the example. And next entry is by work in progress account. In that we will record certified work, uncertified work, materials that is unused lying at the contract. Next, plant and machinery account, that is closing balance of plant and machinery after charging depreciation, that is written down value. That is, this is by work in progress account is our closing balance entry as our contract is not completed. And last is by profit and loss account if it is a case of loss. Note that when contract is not completed, contractee account would not appear and one additional account, that is work in progress account, will be shown. Now, we will study about methods of determining profit on contracts. There are two different situations in the context of contract completion. Number 1, fully completed contract, and number 2, uncompleted contract. Let's understand various situations when there is a profit or loss in case of completed contract and uncompleted contract. First situation, when contract is completed, if it is a case of profit, then the entire profit will be transferred to profit and loss account, and if it is the case of loss, the entire loss will be transferred to profit and loss account. Now, second, when the contract is incomplete, in that there are two situations when insignificant work is completed, that is less than 25% of contract price. In this case, if it is a case of profit, then the entire amount of profit will be transferred to work in progress account, and if it is the case of loss, the entire loss will be transferred to profit and loss account. Second situation, in case of incomplete contract, when the substantial work is completed. Here, if it is a case of profit, generally 2/3 of the profit is transferred to profit and loss account, and that is on cash basis. Formula used for transfer of profit is equal to total profit multiply with 2 divided by 3 multiply with cash received divided by work certified. Remaining part profit will be transferred to work in progress account for contingency. Let's understand with the help of illustration. Total profit is rupees 4 lakh, work certified is rupees 3 lakhs, and cash received is rupees 2 lakh 40,000, which is 80% of work certified. Profit to be transferred to profit and loss account will be rupees 4 lakh into 2 divided by 3 multiply with 2 lakh 40,000, which is cash received, divided by 3 lakh, which is work certified, and amount comes to rupees 2 lakh 13,333, and remaining amount rupees 1 lakh 86,667, that is rupees 4 lakh less rupees 2 lakh 13,333 will be transferred to work in progress account for contingency purpose for uncompleted work. In this case, if there is a loss, then the entire amount of loss will be transferred to profit and loss account. Third situation, when contract is incomplete, it is when most of the work is completed and a small part is remained left. Here, in case of profit, the profit is credited on the basis of total estimated profit. So, profit to be credited is equal to estimated profit into certified work or contract price. Profit to be credited is equal to estimated profit into certified work divided by contract price. Let's understand with the help of illustration. The contract price of contract is rupees 6 lakh and 90% work is completed. its actual cost is rupees 4 lakh and that is fully certified. Estimated cost for remaining work is rupees 20,000. Here total estimated cost is rupees 4,20,000. Thus, estimated profit will be rupees 1,80,000. Profit to be transferred to profit and loss account is equal to 1,80,000 into 4 lakh divided by 6 lakh, which is equal to rupees 1,20,000, and remaining profit of rupees 60,000 will be transferred to work in progress account for contingency purpose. In case of loss, there is no entry, or in case of loss, the entire amount of loss will be transferred to profit and loss account. Now, let us understand various disclosures in work in progress account. Work in progress account of contract is to be shown in final account. We will study how and where to disclose work in progress account. For work in progress disclosure purposes, three things are to be kept in mind. Number 1, balance of work in progress account taken from contract account. Number 2, proportion of profit kept reserved for contingency purpose. And number 3, the amount received from contractee. Now, let us understand these three steps with illustration. First, balance of work in progress account taken from contract account. When contract is uncompleted, work in progress account is debited and contract account is credited on the last day of accounting year. Thus, work in progress shows debit balance. For example, the balance of work in progress account is rupees 11,20,000, comprising of work certified rupees 6 lakh, work uncertified rupees 80,000, closing balance of plant and machinery rupees 4 lakh, that is written down value, and unused material at site rupees 40,000. Then the entry is work in progress account debit 11,20,000 rupees to contract account rupees 11,20,000. Second, when the proportion of profit kept reserved for contingency purpose. When the contract is not completed and assume that total profit of rupees 4,50,000 is earned, and out of which profit of rupees 1,20,000 kept as reserve means for contingency. So, contract account will be debited by rupees 1,20,000 and work in progress account will be credited by same amount. Journal entry is contract account debit rupees 1,20,000 to work in progress account rupees 1,20,000. Third case, the amount received from contractee. Further assume that contractee has paid to the contractor rupees 9 lakh. Since amount is received from the contractee bank account will be debited and the contractee account will be credited. So, bank account debit rupees 9 lakh to contractee account rupees 9 lakh. Let us understand the disclosure in balance sheet. As we have discussed that work in progress will be shown on the asset side of the balance sheet. So, on asset side of balance sheet we will show work in progress at rupees 11,20,000 less reserve profit 1,20,000, which will give us rupees 1 lakh on outer column, less amount received from the contractee rupees 9 lakh. In the next module, we will study how and where the profit or loss of contract account will be disclosed in final account. Let us conclude the session. In this part 2 of contract account, we have studied various theoretical aspects with relevant illustration. Part 1 and part 2 are completely theory based. Friends, you are suggested to refresh these parts before proceeding to part 3. This part has covered number 1, how to deal with special plant and machinery. Number 2, what are the direct expenses and their types like architect's fees, subcontract and their recording in accounts. Number 3, what are indirect expenses and their related accounting treatments. Number 4, how to record when contract is completed. Number 5, what accounting treatment to be given at the end of accounting year when contract is uncompleted. Number 6, we have studied terminologies used in contract account. Number 7, we have studied format of contract account in case when contract is completed and in case when contract is incomplete, that is work in progress. Number 8, how to determine profit or loss of contract account in different situations. Number 9, disclosure of work in progress account in annual account. In part 3, we will study how to apply these studied theoretical aspects in practice through different illustration. I hope you have got clear understanding about the basics of contract costing. We will meet in part 3. Thank you.